Everyone's arguing about whether Ethereum can reach $250,000. Tom Lee said it could, but that debate is irrelevant because the most important thing that happened this week was not a price prediction. It was a balance sheet decision that quietly changes how Ethereum is being owned permanently. One public company, Bitmine, now controls over 3% of Ethereum's circulating supply. Not as a trade, not as a hedge, but as a treasury strategy. By the end of this video, guys, you are going to understand why this move matters more than any Ethereum price target and the shareholder vote that reveals where this is really going. That part comes in minute 3. But right now, let's get to the story. Bitmine just added $104 million in Ethereum during the final and slowest week of 2025. This purchase pushed its total holdings to 4.14 million Ethereum tokens, over $13 billion at current prices. That is roughly 3.4% of all circulating supply. And the company has been explicit. Their goal is to own 5% of all Ethereum tokens. This isn't speculative exposure. This is supply acquisition through a public corporate structure. So Tom Lee's $250,000 Ethereum forecast, yeah, it grabbed headlines last week. But institutions don't anchor upside on percentages. They anchor on control, duration, and structure. And at today's prices, Bitmine already behaves like a sovereign Ethereum holder. At dramatically higher prices, it is going to behave like infrastructure. The number that he threw out isn't there to excite retail. But what it's there for is to justify why Ethereum belongs inside of a treasury the same way that other operating assets do. And once you see that, the rest of the strategy snaps straight into focus. So Bitmine self-describes as the largest fresh money buyer of Ethereum in the world. And that phrase is doing real work. Fresh money means there's no forced selling, no leverage unwind risk, no yield dependency. This is capital that expects to sit still for a very, very long time. Most treasury firms accumulate and wait. Bitmine is accumulating and engineering around the asset. And that distinction matters, and it leads directly to their next move, which is what the institutions care about the most. And it really has nothing to do with Ethereum or the price charts. It's the share authorization vote Bitmine is asking shareholders to approve later in January, because this vote will explain what the company believes Ethereum is going to become next. Bitmine wants to increase its authorized shares from 500 million to 50 billion. And at first glance, that sounds extreme until you understand the why behind it. They're preparing for repeated stock splits. They think the stock's going to skyrocket. And if they think their stock's going to skyrocket, they think Ethereum is going to skyrocket, right? So they are planning for the split. Equity-based capital market activity and acquisitions of funded that are going to be funded with their shares. So why? Because if Ethereum's price appreciates meaningfully, which Tom Lee says it will, 250K, that was the number he threw out. Bitmine can't function as a $500 or a $1,000 stock. So it needs to get this vote in place. So it has the authorization, but not the obligation, the authorization to split when it's appropriate. Management has been very clear. They want the stock price around $25. Not because they're bearish, but because accessibility to the stock creates liquidity, and liquidity enables scale. So what are they doing? They are really expecting Ethereum to skyrocket. So they're front running this. They're getting in front of it to have the votes in place and authorization to split their stock as they see fit, planning for a $250,000 Ethereum. Okay, so this is them engineering their treasury, not diluting the shares. Okay, let's get that right. So Tom Lee, he's also floated $5,000 per share target for Bitmine. And that number is meaningless without stock splits, which is precisely the point. Bitmine's not positioned as a traditional equity. It's being positioned as a publicly tradable Ethereum vault with equity mechanics that adjust as Ethereum appreciates, without pricing retail investors out of that participation. And this is how institutional crypto exposure is actually built: quietly, structurally, and before the consensus notices. Guys, Bitmine already controls over 3% of Ethereum, and their stated goal, like we said earlier, is 5%. ETH is not an inflationary asset in the traditional sense. Every Ethereum that moves into a long-term treasury is one less Ethereum available for the liquid markets, for short-term speculation or opportunistic accumulation. Markets don't reprice because narratives go viral. They reprice when supply disappears. And that is what their strategy is doing. So let's return to the opening claim here. The $250,000 price from Tom Lee is really not the story. Anybody can throw out numbers. But the real action that they're taking, right, in authorizing the stock splits means they have real conviction to the number that they're throwing out. The other side of the story is that Ethereum is already being treated like a strategic reserve asset. Bitmine isn't betting on Ethereum. They are building around it. And when treasury behavior shifts, price follows, not the other way around. So guys, in the next video coming out, I'm going to break down the single on-chain metric that will tell us whether Ethereum treasury accumulation is accelerating or about to stall months before the price will reflect it. So if you want to see that signal early, you know what to do. Hit like, hit subscribe, and I will see you in the next one.